Thank you for watching today's lesson. Our hope and prayer is that you'll be greatly helped as you participate in this financial Bible study led by our pastor. If you want to learn more about Pastor Brian Johnston, you can read his testimony on our church website, glbcyorkregion.com. Listen carefully today as Pastor Johnston teaches another lesson in the series, Financial Management God's Way. If you still do not have the participants' workbook for this course, you can purchase it from coplandfinancialministries.org. We also want to invite you to come be our guest sometime at Gospel Light Baptist Church of Richmond Hill. Our website is glbcyorkregion.com. You can also find us on Facebook or YouTube. Once again, we hope today's financial lesson is a great help and blessing in your life.
Well, good afternoon. My name is Brian Johnston. I'm the pastor of Gospel Light Baptist Church in Richmond Hill, Ontario. For the past several weeks, we have been studying Financial Management God's Way, which is a biblical financial study, a course that was designed and written by Tom Copland from Copland Financial Ministries in Markham, Ontario. And he is an accountant. He's a Christian man, a godly man, and a great financial counselor and a help to many, many people. He has been counseling and helping people in the area of finances for a number of decades. And the Lord, I believe, has certainly used him. We have been studying this course, and hopefully some of you have the participants' workbook for this course. If not, it is something that can be, again, purchased from coplandfinancialministries.org from their shop. You can get a hard copy of it, get a book mailed to you, or you can buy a PDF of this course that could be mailed to you as well. We're coming here today to lesson number 6, which is in regards to budgeting. And we want to share a few thoughts with you today, and then also just get into some practical nitty-gritty of Tom Copland explaining how to use various forms, the 7 forms in the Copland budgeting system. So this will be a little bit different from a lot of our lessons, but very practical and helpful to you in setting up and establishing your budget. Let's pray as we begin. Heavenly Father, give us wisdom today as we try to study these things of budgeting. And Lord, I pray that you would give people a good understanding of how to use these tools in establishing and implementing and living by a budget in their life. In Jesus' name I pray. Amen. Even as Tom Copland would mention to you in the workbook and so on, you could use a different budgeting system if you wanted to, but this is the one that is going to be explained in this course. And the important part is diligence. As we emphasized a lot in the last several lessons when it comes to paying off debts, diligence is so vital. And it's going to take diligence and self-discipline to set up a budget, to establish a budget, to implement and live by a budget. But doing so can really help you to get organized in your finances, know where your money is going as the Bible teaches us to. And so I believe it's very important, very, very helpful. What is our goal here today in lesson number 6? The goal of lesson 6 is to learn how to develop and implement a budget. In many places in the Word of God, God admonishes us that we are to plan ahead. We're not just to go through life aimlessly. We are to plan ahead. Planning your finances can best be accomplished by using a budget. You've got to have a plan. You've got to have a plan and follow it. Now, what is the purpose of budgeting? The purpose of budgeting is to ensure that you spend less than you earn so that you have a surplus each month. This surplus can then be used to either pay down debts, pay off your debts if you have debts, or save for future needs, including those unexpected expenditures that will arise in every person's life. About 90% of people do not budget. As a result, most people spend more than what they earn, and they accumulate debt rather than a surplus. We know, we've studied it biblically. We've looked at the verses of Scripture that teach us God doesn't want us to live with indebtedness. He, in fact, wants us to live with a surplus. It is wise for us to have money saved. And it is foolish for us to live with indebtedness. You know, as a result of people not living by a budget, many people end up spending more than what they earn. They're accumulating debts. Their debt load is growing, and they're having debt problems rather than a surplus. Many people make financial decisions based upon their feelings, just how they feel about it, or maybe their lust or desire because they want something, so they spend money because they wanted it. Many times people are influenced by their personal desires rather than the facts regarding their finances and maybe the truth of what they can afford or not. And they're living in the wrong way. A proper budgeting system will provide the financial information needed for us to make wise decisions. We have got to start controlling our spending, knowing what we really have available to spend, and just living life differently. We need to take out the guesswork, take out the gut feelings and so on, and just live by a budget, live by a plan. Proverbs chapter 27 and verse number 3 is a verse that we've looked at several times in this series. It says this: "Be diligent to know the state of thy flocks. Be diligent to know the state of thy flocks, and look well to thy herds." You need to know everything about your financial situation. You need to know what you have, know what your assets are and your liabilities, and know what you're spending and where it's going and what it's being spent on. You need to know these things. Now, most of us may not have flocks and herds today like that scripture was written to those that were involved in farming and with herds and so on. Most of us would have housing expenses. We'd have automobile expenses. We'd have food expenses. We'd have different expenses in life. We'd have assets and liabilities. And the reality is, the sad truth is that most people do not know where their money is being spent. Some are actually unaware that their indebtedness is growing every single month because they keep on spending more than what they're earning. A proper budgeting system will provide the financial facts that you need in order to make prudent or wise financial decisions. Look at a couple verses with me. Proverbs chapter 21 and verse number 5 says, "The thoughts of the diligent tend only to plenteousness, but of everyone that is hasty, only to want." It's going to take diligence in having a plan, making a budget, living by a budget, so that you can get to a place of having plenty. And having savings and being out of debt and so on. But when we are just hasty in our decision making and hasty in our spending and unwise in our handling of money, it'll lead to want. It will lead to poverty. Proverbs 21 and verse number 20 says this. Proverbs 21:20. "There is treasure to be desired and oil in the dwelling of the wise, but a foolish man spendeth it up." The Bible teaches us that it's foolishness to just spend up everything that we have. The wise person is going to save. There is going to be treasure to be desired in their dwelling, in their house. It is wise to save. And in order for folks to do so, living by a budget is an essential part of having a plan and getting organized and so on in your finances. Developing and implementing a budget is consistent with biblical truth and biblical principles. In the parable of the tower, Luke 14:28-30, we've mentioned it often in this series, but Jesus called a man a fool because he did not plan ahead. He did not count the cost beforehand. He didn't realize what all this was going to cost him. And he ended up spending more than what he had. A budget is a tool that, if used properly, will be effective in planning your finances. There are many different types of budgeting systems available. Some are very detailed, some provide extensive information, but generally would take you some time to learn and maintain and implement and so on. On the other hand, some budgeting systems are briefer, maybe simpler to understand and manage, easier to learn, and they would require less time for you to maintain them each month. This study presents to you the Copland budgeting system. the Copland budgeting system. It provides sufficient details, but is simple enough to be learned and maintained with minimal time. In addition, because it is an Excel-based system, anyone with a basic knowledge of Excel can modify the template to his or her own preferences or situation. There's no charge for this budgeting system. A copy can be downloaded from CoplandFinancialMinistries.org under the budgeting tab, or if you're on our mailing list, we've been emailing that to people, or you could request that, and we'd be glad to send that to you. Any other budgeting system, Tom Copland says, is fine as long as you use it diligently and regularly. What's important is that you have a good budgeting system in place that provides you with the necessary financial information so that you can start making wise decisions. A well thought out budget will assist you in making prudent financial decisions based on the financial facts rather than just your feelings. In the long run, if you invest the time, if you'll be willing to take the time to learn and implement a budgeting system, the benefits will far outweigh the time and the sacrifices that you need to follow through. Again, we go back to what I said a few weeks ago. It takes character. You've got to have character to start parenting yourself and disciplining yourself in managing money and handling finances. And it takes a lot of character and hard work to plan a budget and start living by a budget. But if you'll make the effort to do so in the long run, you'll find that it is very much worthwhile. I want you to watch this short video now from Tom Copland that is explaining to you, just in summary, the 7 different forms that are used in the Copland budgeting system.
In the parable of the tower, Luke 14:28-30, Christ admonished us to plan ahead, and the most practical way to do that is to develop and implement a budget. In this part, I will be demonstrating in detail how to use the Copland budgeting system. There are actually 8 parts to this video. They're joined together, of course, and you'll see in these 8 different parts, the first is providing an overview of the Copland budgeting system, and then the next 7 deal with each form, namely form number 1, number 2, number 3, number 4, number 5, number 6, and number 7, all of the Copland budgeting system. To obtain a free copy of the Excel-based Copland budgeting system, or to review the video again, go to our website, which is CoplandFinancialMinistries.org. I'd like to demonstrate the Copland budgeting system. The system consists of 7 forms, and I'm going to give you a quick overview of each form and how they work, and then come back and provide the details. Form number 1 provides a list of simply your assets and liabilities. Form number 2 is where you indicate what your salaries, wages, and other income is, and you put your salaries and wages net of your taxes. Form number 3 is the non-monthly expense planning form, where you key in the annual costs and then it's automatically calculated on a monthly basis. You need to keep track of these so you can provide for them. Form number 4 is a savings account allocation, so that when you do set aside money for savings, if it's designated for a future expense, you'll know what it's there for. Form number 5 is your estimated monthly budget, which provides an overview of all of the expenses that you anticipate you're going to be incur on a monthly basis. This is an important form as it shows, perhaps more importantly than anything else, whether you have a monthly surplus or deficit. Form number 6 is the form that you're going to use almost on a daily or perhaps every 2 or 3 days, where you start tracking your expenditures. And I'll provide the details later, but it's an important form. Form number 7 is one where you don't actually have to put anything on. It's automatically calculated. The figures from your present budget from form number 5 end up in the first column, and the figures in terms of your actual expenses for a month from form number 6 end up in the second column. And then it actually compares your actual expenses to your budgeted amounts, and it shows where you're over budget or under budget.
So here we are now. You want to get organized. You want to develop a budget and implement a budget in your life. What is step number 1? Step number 1, list your assets and liabilities. List your assets and liabilities. Assess your financial position by listing your assets and liabilities on Form 1. Be sure to list all of your debts. Some could easily be missed if you're not careful. Maybe you'd forget about, some loan perhaps that you got from a relative or a friend. Maybe something that was supposed to be paid, but it's overdue now and it's not been paid off. Maybe some dental bills. Maybe something that you owe to somebody for something done for your children, whatever. Income taxes that are owing. It's best to face the facts in your life, regardless of what your situation is, regardless of how hard it may seem. Be honest about your situation, even if it's discouraging at first, and just list all of your assets and all of your liabilities. Everybody, every company, everyone that you possibly owe any money to, you need to keep good track of that. And so start first, step number 1, by listing your assets and liabilities. Watch this next video from Tom Copland explaining how to use Form 1.
Here's my detailed explanation of form number 1. On this form, what's critical is to list the assets and liabilities. As the proverb says, know well the condition of your herds and flocks and grains. We don't have herds and flocks and grains today because we're not, most of us at least, aren't farmers. But we do need to know well, we need to understand what our different assets and liabilities are. So I'm going to put in some sample numbers. So for this couple, I'm going to assume that they have $1,000 in the bank. I'm also going to assume that they have investments, perhaps in a mutual fund or something, of $10,000. In terms of their principal residence, they estimate that the fair market value of their principal residence is $350,000. In terms of their pension plan, their RSPs, the husband has about $40,000 in his, and the wife has about $10,000 in hers. We now go to the liability side. And by the way, you should list any other assets. This is sort of for those other types of assets that could be sold and generated some cash. Do not list anything of a personal nature that you would never ever sell or couldn't be sold. But often if people go and look at their basement, they could have stuff in their basement, things that are valuable to other people that they could sell through a garage sale or through the internet or whatever, and you would list those there. And if you do have something, let's suppose this couple does go into their basement and they figure out they have $5,000 worth, so we're going to put that in there. Next, we'd like to list their liabilities. And the first line is their credit cards, and this couple are doing what most people are doing. They're running up their credit cards and they owe $25,000. In terms of personal loans, they have loans that they owe to family members of $30,000. In terms of some of their other debts, they have a personal line of credit on their home of $60,000. They've done what a lot of people do. They've basically done some bill consolidation loans where they've taken out a personal line of credit in order to pay down their credit cards. Because if they look at their finances over the last couple of years, they've been spending a little more than they've been making on a regular basis, which is so common. In terms of the mortgage on their principal residence, we're going to assume that that's $200,000. And you can see the total here. By the way, you should watch for other types of debts. For example, there could be things like property taxes overdue. There could be things like dental bills or any other types. And we're going to assume that they have $10,000 of some of those other costs. So you can see the total liabilities that this couple has is $325,000. And their net worth on their personal balance sheet here is $91,000, which on the surface looks not too bad. But in actual fact, when we get into some of the other forms, you'll see that they have been spending more than they're making on a monthly basis, and that's why they're running up the credit cards, and that's why they have the personal loans and the personal line of credit.
So now let's talk about step number 2. Step number 2 is to list your revenues. List your revenues. For that, you're going to use form number 2 to summarize your income and so on. You need to record your salary, your income, your paycheck, the money that you earn and so on, your wages, net of any income withholdings or other deductions. The program should help to transfer for you the total revenues to the bottom of Form 5. So you'll keep track of this on Form 2, and there are some things within the forms that automatically get carried over to where they apply on a different form. watch this next video from Tom Copland, and he'll explain to you how to use form number 2.
On form number 2, you essentially list the revenues or the income that you have for a typical month. So let's suppose that the husband's wages, net of his withholdings, again, put in net of with his holdings, is $4,000 a month. And let's suppose that the wife works part-time. She earns $1,000 a month. And let's suppose they have a little bit of investment income, maybe $100 a month. And then they have other miscellaneous income, can be like a child tax benefit or something like that of $200 a month. So I think you can see this form is very simple, very straightforward. You just list all the sources of income on a monthly basis. And as you can see, we've got formulas in this Excel template that total up the total revenue for a month. And you'll see at a later date that this total revenue does show up on form number 5. And also please note that it's important to, I would round everything to the nearest dollar. You don't need to put in pennies. It'll make it a whole lot faster.
Okay, so you're going to take time this week to follow step 1. You're going to list out all your assets and liabilities using form number 1. You're going to follow step number 2, where you're listing out your revenues, any possible form of income or increase that you have. And then you need to follow step number 3. Step number 3, plan for non-monthly expenses. Plan for non-monthly expenses. Many expenses, such as maybe taking a vacation or maybe paying off certain types of insurance, if you've been someone who's paid those annually or yearly, then those expenses are not something that you'd get a bill for it every month if it's something you pay once a year, or a vacation you take once a year. And those things maybe could be missed in the developing of your budget. As a result, it's important that you set aside the necessary funds throughout the year to ensure that there is sufficient cash available when the expense is incurred. Living by a budget is living your life planning and knowing that I've got these expenses in my life every year, every month, and I'm going to be setting aside money and saving money so that those things can be paid, so that I'm not having to swipe a credit card or not having to go in debt and be borrowing money to pay off the different expenses and so on that are going to come in my life. You don't want to be forced into a position of taking on debt to pay for any of these non-monthly expenses. For example, if you plan to take a family vacation every year and you say, we're going to spend $1,200, then you need to know, okay, I need to be setting aside, saving $100 every month. You don't want to live to that place where, wow, we want to take a vacation. You don't got the money to do it, but so you take that vacation on credit card. You know, pay for everything by credit card. Everything will cost you more, and you've put yourself in debt, and you've started violating biblical principles. You've got to live by a budget where you start setting aside money and saving money for that, so that you can avoid debt. In addition, there are there are non-monthly expenses such as house maintenance. You know, different maintenance items that may come up on your home, automobile repairs. There are going to be things that you've got to estimate for and plan for and set aside the funds for each month, so that when those expenses arise at different times throughout the year, you have got the money to be able to pay for them. It's impossible to maybe project exactly what some of those maintenance or repairs or different expenses will be, but usually you can get a general idea of what it might cost you from year to year. And again, if you've never done anything before, you've just got to start estimating, planning, and seeing how things go and developing your budget. Don't quit, don't give up if this thing of implementing a budget seems hard. It'll take a process of time to develop it and get in the habit of using it and following it effectively, but stick with it. It's worth it to make the effort and put forth the work in doing so. I want you to watch Tom Copland now, and he's going to, in this next video, explain using Form 3.
Form number 3 is the non-monthly expense planning. This form is really important. Often when individuals or couples prepare their own budget, they will forget about their non-monthly expenses. And you can see some sample non-monthly expenses here. You'll notice that it's important to key in an estimate for the year. Wherever the yellow shading is, you should key that in. For example, house maintenance. This couple is estimating, based on prior years, that their house maintenance for a typical year would be $1,200 a year. And as you can see, it automatically does the calculation and it shows up as $100 a month. Property taxes, they know that last year their property taxes was $3,300, so they're going to key that number in. And again, you can see that works out to a cost of $275 a month. Now, by the way, if your property taxes is included in the payment of your mortgage on a monthly basis, you don't have to put anything there. House insurance, normally it's paid once a year, and last year it was about $600, so that's their estimate. Automobile replacement, it is important to save for your next automobile. This couple is not going to put any money in there because they don't have it. They are running a deficit on a monthly basis, but they should ideally, once they get their monthly cash flow under control, be setting aside some funds on a monthly basis for their next automobile. Automobile repairs and maintenance. This couple estimates, based on prior years, they have 2 cars, $2,400 a year. Some people will say to me, and as you can see that works out to $200 a month, that they need to set aside for auto repairs. Some will say, well, we don't know what that's going to be, and that's true. But if you, just a rule of thumb, if you allow about $1,200 per year per car, you'll probably cover off most of your automobile repairs. There will be exceptions, but you'll probably cover off most of them. And even if you ran over that, at least you would have some money available. Auto insurance, it's anticipated their auto insurance next year will be about $2,000. So they key that in. And again, it calculates $167 a month. Vacation, this couple plans to take a vacation next year, and they estimate the cost of that will be $1,800 for next year. And by doing this, by saving $150 a month, when it comes to next year's vacation, they'll have the cash available, and they won't do what most people do, that is put it on the credit card and get into debt. Investments for their pension plan, they should be putting aside some money for that on a monthly basis. This couple's not doing that because they are in debt and they do have a negative monthly cash flow, but once they get their finances in order, they should do that. Healthcare expenses, they estimate it could run $1,500 a year based on prior years. Again, it's only an estimate. If you have children that need braces or something, that obviously is going to be a lot more, but they're going to put through the $1,500 a year. Christmas gifts, they estimate that they're going to spend about $900 on Christmas and birthdays in an average year, and they key that number in, it works out to $75 a month. Other is the miscellaneous category that doesn't cover anything else, and often people will say to me, well, $50, $100 a month. Not true. Often $3,600 a year or $300 a month would be quite typical for the average couple. What's important about this form is that you can see the non-monthly expenses add up to a total here of $1,442 a month, and that means every month they need to set aside that money to save for these expenses so that when these expenses come due, they have the cash and they're not forced into debt. As you can see, you should prepare this form initially and revise it only when there are changes in future. So this is not a form that you have to do every month.
Let's talk now about step number 4 in developing and implementing a budget. Step number 4 in following the Copland budgeting system. Step number 4 is to transfer funds from your checking account into savings. Generally, the amount that needs to be saved each month for non-monthly expenses is significant. Hence, the total amount shown on the schedule or form number 3 for non-monthly expenses should be transferred into your savings account, and it's earmarked, it's designated, it's money that you're setting aside for expenses that you're going to have. Setting money aside for the different things that you're planning you'll need money for throughout the year. As non-monthly expenses are incurred, it's appropriate to transfer the necessary funds from your savings account into your checking account to be able to pay those bills. You'll reduce the appropriate expense category on Form 4 as funds are maybe withdrawn from a savings account and placed into a checking account to be used for the expenses that you've had. The program will automatically record the transfer of funds from your savings account to your checking account on Forms 4 and 6, respectively. The balance shown at the bottom of Form 4 at any time should indicate the portion of your savings account that is earmarked or designated or set aside for a particular expense category. The objective is to know what portion of your savings account balance will be needed for the non-monthly expenses that you're anticipating. Knowing that expenses are going to rise for car repairs and maintenance on your home and different things, so that you don't just inadvertently spend that money on other things, thinking, oh, I've got this money, I can spend it. No, you're going to want to know clearly that this money that's being set aside in savings, it's for expenses that you are expecting to arise. Or even once you learn to save more and so on, you're even setting money aside for unexpected expenses as well. The bank balance figure shown on Form 4 should agree with your savings account bank balance. If not, then an entry has been missed, and it'll be necessary to check your work and try to figure out where you made an error. Watch Tom Copland now in this video explaining how to use Form 4.
This is form number 4, the savings account allocations. The purpose of this form is that when you do save a certain amount each month for the various categories, it automatically allocates the amounts over here across the top to each category. And the whole purpose, by the way, is so that if you have money in your savings account, you can determine how much money is designated for future needs and how much would be surplus funds. And so here's how it works. If you go to form number 3 for a minute, you'll see on form number 3 that we calculated certain non-monthly expenses. For example, house maintenance was $1,200 per year, and it works out to about $100 per month. Or property taxes works out to $275 per month. And if we go to form number 4, you'll see that these amounts automatically show up here. And as a matter of fact, if you follow it through, all of the other amounts that are calculated on form number 3, these amounts that are showing in this column here, right down to the $300 for others, they're showing over here on form number 4. And the idea here is, again, to know how much money you need to have in your savings account for future expenses. Now, one of the practical aspects is, of course, you can have all these allocations on an accounting basis in your savings account, but you got to actually put some money there. So what you do there is you go to form number 6, and in form number 6, you have to record the revenue. Now, we're going to assume that this couple gets their revenue once a month. If it's twice a month or 4 times a month for you, you would key it in independently, but I'm assuming once a month they get their full $5,300. And then what they would do immediately is they would transfer $1,442. That was the total amount at the bottom of form number 3. They would transfer that to their savings account to cover the non-monthly expenses. And you can see I keyed the $1,442 in there. So if you go back to form number 4, you will see the $1,442 shows up as a receipt from the checking account. There it is. And you can see that we actually have a balance in the account of $1,442. Now, the main purpose of this form is what's shown at the bottom here. We have funds in the savings account of $1,442, designated funds for future expenses of $1,442. So that means the undesignated funds is only is 0 in this case. What that does is it prevents the couple. Often I see couples or individuals will say, hey, can we afford that new TV that's $1,000? And they'll say, well, sure we can. We have $1,442 in our savings account, when in fact they cannot afford to buy it because those funds in their savings account are designated for future expenses. And since they have no funds available, they have no undesignated funds, they should not go out and make that expenditures. All their savings effectively is accounted for. It's designated for future purposes. And that's the main purpose of keeping track of form number 4 in all these various expenses in your savings account.
We've talked about step number 1, listing out your assets and liabilities. Step 2, list your revenues. Step 3, plan for non-monthly expenses. Step 4, transferring funds from your checking account into your savings account, and vice versa at times when those non-monthly expenses arise. Step 5, estimate where your money is currently being spent. Step 5, estimate where your money is currently being spent, and you'll use Form 5 to do so. The non-monthly expense items calculated on Form 3 should have been transferred automatically to Form 5 if you're using the Excel spreadsheet. Next, estimate your present level of spending in each category that is blank on Form 5. The program should calculate your monthly surplus or deficit at the bottom. If you have a deficit, if you are starting to figure out where your money's being spent and you realize, wow, I've got a deficit. I've been spending more than what I've been earning. My expenditures have been more than my revenue or my income. Then you have got to rework your budget. You have got to figure out what are some things that can be cut out of your budget. What are some expenses that you can eliminate? What are some expenses that you can reduce? What are some things that you can spend less money on? So that you start balancing your budget. You can't live like Justin Trudeau, our Prime Minister, who said the budget will balance itself. You have got to have wisdom, and I shouldn't have said that maybe, but you've got to have wisdom and start following principles and knowing where your money's going. Oh boy. If you're spending more than what you're earning, you got to find ways to reduce expenses and make sure your budget balances. Be sure to spend less than you earn each month and use the surplus money then. You want to be spending less than you're earning and creating a surplus so that you can use that to pay off debts if you have debts, or to be saving for future needs. And that's so important, and that is biblically the way that God wants us to live. Watch Tom Copland now as he explains form number 5.
This is form number 5, which is the estimated monthly budget. This is the form that sort of ties a lot of things together, shows you your expenses, including the different types of expenses, and you'll see we'll come down and we'll determine if there's a monthly surplus or a deficit. For this particular couple, they're giving about $100 a month to the Lord's work. Their mortgage of $1,013 is what they pay on a monthly basis. Their electricity bill is averaging about $275 per month. Their gas bill is $225 per month on average. Their water and sewage is about $100 per month. Their telephone is about $300 per month. Now this includes other things like internet connection as well as cable TV and that kind of stuff. Now you'll notice what I'm doing here is filling in those boxes that are yellow. There's some numbers that are here already, and these figures came from form number 3. For example, the property taxes of $275, that was calculated over here on form number 3, and it automatically gets transferred to form number 5. And you'll see there's other numbers here that I did not have to put in that came from form number 3 as well. The maintenance of $100, the insurance of $50, the insurance on the automobile $167, car maintenance, etc., and several others on this side, vacation, as well as health care, gifts, and others. So those automatically flip over from form number 3 into form number 5. But there are some expenses, and these are the ones, again, that are marked with yellow. Some of those categories have to be filled in. And by the way, if you don't have the exact number, don't worry, at least give it your best estimate, perhaps allow a bit of a cushion. For this couple, they looked at their food bills over the last several months, and they have two teenage boys, so they're spending more than normal, $800 a month. Automobile replacement, that was calculated on Form 3. Remember, they should be saving for their next automobile, but they're not doing that. Gas and oil, they do have 2 cars, and right now they're spending about $300 per month. On their credit cards, they're only paying the minimum payment each month, which is not good, but that's all they're doing. That's $500 per month. And on their personal line of credit, they're just paying interest, and that works out to about $210 per month. If you now go up to the other side, eating out, they spend on average $250 per month. Their vacation's $150 per month. That comes from our calculation on form number 3 of $1,800 divided by 12. Their sports, gym, that kind of stuff, they spend about $100 per month. On clothing, they're incurring about $200 per month. And insurance, these are things like life and disability insurance. That's being taken out of their bank account on a monthly basis. It's about $100 per month. And for education for their children, just miscellaneous education costs, books, etc., they spend about $100 per month. So what you can see this form is, once you completed everything here, you can see their total expenses for a typical month is $6,015, while their total revenues, which comes from form number 2, is only $5,300. So if they did include all of their non-monthly expenses that we've included, they end up with a monthly deficit of $715 a month. And this is very typical of what we see with most individuals and couples. That is, they're spending a little more than they're making, typically using credit cards or personal lines of credit in order to finance it, and as a result they're accumulating debt and they're incurring a monthly deficit. And this is one of the first things that they have to deal with. And often what I'll suggest at this point to whoever we're working with, that they go through some of these expense categories and decide together what expenses they could lower in order to try to balance this somehow. They have to make sure that they're spending less than they are earning, so they have a surplus here, so they have some money available on a monthly basis to pay down debt rather than spending more than they're making and accumulating debt.
So now let's talk about step 6. Step 6 in your budgeting plan and following a budget is this: regularly track your expenditures and revenues. Step 6, regularly track your expenditures and revenues. Many people have a reasonable level of income, but they still spend more than what they earn. In the long run, this is what causes financial difficulties to arise and often causes conflict then in homes and in marriages, because husbands and wives have trouble getting along when money is being mismanaged. Experience has shown that most people do not know where their money is being spent. To get control of your finances, it's important to develop and implement a budget. This includes recording all of your expenses on Form 6 so that you know where your money is going. Recording your expenses can be simplified if you'll follow these guidelines. Let me share with these with you from Tom Copland. Use one joint family checking account where you receive your canceled checks and bank statements each month. And sometimes people don't get that in the mail anymore necessarily. Some people just use online bank statements and so on. But that can show you, the canceled checks. It can show you everything. But you got to make sure you're keeping track of all these things. So a joint family checking account that you use to pay your family expenses and keep track of things. Depositing your income, first depositing all your income into this account, and to the extent practical, paying all your expenses from it. Then next, set up one joint savings account and earmark its funds as per Form 4, where you are setting aside money each month into the savings account, but there's a plan for it. It's not just money there for whatever you want. It's money that's being set aside for other expenses you know you're going to have throughout the year, or even unexpected expenses that will arise. Ideally, don't use credit cards. If you could just cut up all your credit cards and be rid of them, that's the best way to live. If necessary, use only one credit card and pay it in full each month. Pay it off in full each month so you're not paying interest charges. Allocate the various expenses to the appropriate columns on Form 6. Next, take a few moments each day. Take a few minutes each day and record all of your expenses on Schedule 6 or Form 6. Whether those things are paid by check or cash or whatever, nowadays e-transfers or, Interact, whatever. Round all the figures to the nearest dollars if you want to, so that it's maybe a bit easier for you to keep track of things and so on. Next, record transfers to the savings account in the appropriate column and ensure that transfers to and from the savings account agree with the corresponding transfers on Form 4. Now watch Tom Copland, and he's going to explain to you how to use Form 6 in the Copland budgeting system.
This is form number 6. This is the form that allows you to track your expenditures by the various categories on a regular basis. And I usually recommend to individuals that they update this form every day or perhaps every 3 or 4 days and keep track of it. I also usually suggest that if you're married, to have one checking account and one savings account, have one joint checking account, and have all your expenditures go through this one joint checking account. And if you do use a credit card, pay them off each month, and as you pay them, record the expenses to the various expenses as shown here. So I'm going to just give a few examples in terms of the figures. Let's suppose the first thing they do is they pay their mortgage payment for the month, which is $1,013. And let's suppose they give $100 to the Lord's work. And then let's suppose they incur some expenses for food. And let's suppose it's $400. And let's suppose they now come up with an automobile repair, and it's $100. They pay that, and you can see as they disperse these expenses, and you should put them in according to the day. You can see the day each here. As they disperse these expenses, the balance automatically decreases over here. So this way you can keep track of how much money is in your joint checking account, so you don't spend more than you have there. For those expenses, for example, automobile repair, where we do have some funds in the savings account, you certainly should pay it from your checking account, but you can actually transfer money from your savings account to your checking account to cover this. And so to do that, you basically go to form number 4. And in form number 4, you'll see under automobile repairs, we do have $200 there. And so what you do is you key in a minus $100. And what that does there is it takes $100 out of this category. And you can see it automatically transfers that $100 over to the checking account. And by the way, don't forget to physically transfer the funds as well, either through the internet or ask the bank to transfer it when you're at the bank next time. But you see this $100 automatically comes here, and it increases and it now is available for the automobile expense to cover that $100. Next, this couple on the 8th day of the month, they had to make the payment on their personal line of credit, and I meant on their credit card, and that was $500. And they made it on that day, and we've recorded that payment. They've also incurred on the following day entertainment and recreation expense of $150. And they also incurred some clothing expense of, let's say, $200. And basically what you do is you enter into the various types of expenses as they're incurred throughout the month. On the next day, they incurred some house expense. It was actually a house repair of $125. And again, if you recall, house repairs, we do have some money in the savings account that can cover that. So let's go over to the savings account form number 4. And if we look under house maintenance, we do have $100. We don't have the full $125, but we do have $100. And so we can transfer that $100 from the savings account over to the checking account. And again, be sure to transfer it physically as well. Don't just transfer it on your form, but transfer the money physically between the bank accounts. And you can see as we do transfer this money, the balance in your savings account calculated here automatically gets reduced. And you'll see that $100 shows up on the 10th day of the month over on form number 6. And here it is there in order to cover this expense of $125. Now in that case, we didn't have the full amount available in the savings account, but at least we could cover the majority of that expense, and we only had to take effectively $25 out of our joint checking account. And this couple just continues to record their expenses as they're incurred. Let's suppose for house expense, on the next day they pay their hydro bill of $250, and a couple days later they pay their gas bill of $225. And then their water bill comes in and they pay $120 on that one. And then let's suppose after that their property tax bill comes in, and it's $550. Now again, if you remember, part of this property tax bill was covered and is available in form number 3 in the savings account. My apologies, it's form number 4 in the savings account. And because we do have some money available there, at least $275 worth on the property taxes, we can take those funds from an accounting perspective from the savings account and transfer it to the checking account. Again, remember to do that physically. And you do that by just simply entering a minus $275 there. And you can see this, the savings account balance comes down. You can also see that the designated funds get adjusted as well We had $275 that we put in there at the beginning of the month, designated for property taxes. We've taken it out so there's nothing left. And again, you look down here, they have $967 in the savings account, and the full amount of the funds are designated for future purposes. So again, they still have no undesignated funds. So this couple should never think because they have money in their savings account that they can go spend some. All these funds are designated for future needs. So we'll go back now to form number 6, and this couple just continues to incur other expenses. Let's suppose on the automobile side they incur their gasoline bill, and they paid that of $300, and that they've incurred some other expenses, some more entertainment and recreation, perhaps $125, and then they've incurred some healthcare expenses, perhaps some chiropractic bills or something of that nature of $150. Their life insurance premium comes due, and they have to pay that. It's $100 a month. And miscellaneous, let's suppose they incur all their miscellaneous expense of $330 at one time in the month. Obviously, and for most cases, they're going to incur that over several times in the month. And that's what form number 6 does. What it effectively does is it tracks your expenditures throughout the month. And often a couple or an individual have to do this, prepare this form for 3 or 4 or 5, 6 months to get a really good handle on where their money's going. And by the way, just tracking your expenditures can make you more conscientious of where you spend money. And often we find that the income, the spending rather, goes down. Now you'll see in this case, we did keep track of the balance here, so they actually ran into an overdraft. And obviously the only way they're going to be able to fund that is if they have an overdraft privilege or a line of credit. I've assumed that they have that here. Again, it's not an ideal, but at least they have it. So what we have here, that's the end of form number 6. The idea is to track your expenditures. It is best to update this form every 2 or 3 days. And if you have to do some estimates sometimes, perhaps you took $100 out of the bank and you have $20 left in your wallet, and you're not sure where the money went, at least allocate it to somewhere. Often people will allocate it into the miscellaneous categories. If you can track your expenditures within $100 per month, if you can track within $100 of what you're spending, you're doing much better than most.
Now let's talk about step 7. Step 7, do a budget analysis. Do a budget analysis. On form 7, compare your actual expenses to your budget. Compare what your actual expenses have been to your budget and assess the reasons why maybe you've had an overrun in certain categories or whatever. You gotta figure that out. Why is that happening? Prepare a new budget for next month with the appropriate adjustments. A budget will change from time to time. And at first, in the beginning, especially as you're developing a budget and you're implementing a budget and you're maybe learning where your money is going for the first time, and you're learning how your money has been being spent, and you're really watching that closely, there may be adjustments that are constantly being made over the first several months. And you're even going to be, especially if you have indebtedness, you're going to be looking for ways to constantly change that budget and reduce expenditures and so on, so that you can have the money necessary, surplus money, to pay down your debts and start saving. Again, Tom Copland says generally it could take 3 to 6 months and maybe even more sometimes to develop and implement a practical budget. Once your monthly expenditures and revenues are balanced for 3 or 4 months, be sure to set some longer-term financial goals. Reducing your debt, eliminating your debt, retirement planning, children's education, different things you may want to save for or invest in, doing the work of the Lord. Watch this short video from Tom Copland explaining Form 7.
Form number 7 is the budget analysis form. On this form, you actually don't need to enter anything. All this does is it takes your present budget on form number 5 and your actual expenditures on form number 6, and it compares the two and lets you know whether you're over or under budget. Now, with this couple's particular situation, they are spending more than they're earning, even on their budgets, so they obviously at some point have to go back and go through form number 5 and reduce some of their expenditures. But as you can see, their actual expenditures, as they're compared to their budgeted expenditures, it just shows you the overage and underages, and it just lets you know if you're spending more than your budget in a certain category, and sort of highlights it for you to deal with that.
We've been talking about implementing the Copland budgeting system. And 7 steps. Number 1 was list your assets and liabilities. Step 2, list your revenues. Step 3, plan for non-monthly expenses. Step 4, transfer funds from your checking account into savings. Step 5, estimate where your money is currently being spent. Step 6, regularly track your expenditures and revenues. And step 7, do a budget analysis. Now there are other things that you can read in your participants workbook. There are other examples in the back of this lesson 6 in the workbook. As well, there is an explanation in the budgeting forms, where you'll find the budgeting forms on the website coplandfinancialministries.org, or if you ask me to email those to you or send you, there are the forms. There's an Excel spreadsheet that has the 7 different forms. There's also PDF files and so on that help to explain things to you. And so you can read things there that will help you to get a better understanding of each one of these things as necessary. But also feel free to reach out and ask questions as well. Let me share with you just a couple other points as we close this lesson today. Over time, you want to accumulate a cushion of cash here, Tom Copland calls it. You want to have an emergency fund set aside of about 3 to 6 months living expenses. And at least that, to eventually have more than that would be great. But you want to have a cushion of cash. You want to have an emergency fund. Start saving an emergency fund to be able to provide for yourself when some unusual or unexpected financial circumstances arise in your life. What if you're both working, husband and wife, and one of you loses your job? Or what if one of you gets sick? Or what if just something happens where some unexpected expenses come? Things you just weren't prepared for. And so it's good to start having money set aside to be able to prepare for those unexpected things. Again, Proverbs chapter 21:20, the biblical principle teaches us to do that. It says, there is treasure to be desired and oil in the dwelling of the wise, but a foolish man spendeth it up. And so we want to learn to save and have money set aside for those hard times and for unexpected expenses that arise in our life. And consider what Joseph did. Consider the plan that God gave to Joseph down in the country of Egypt in the book of Genesis. God directed Joseph and gave Joseph wisdom in saving some of the grain and so on during the years of plenty, so that the people would be provided for during the years of famine. And it is wise for us as well to make sure we're saving and having money set aside during times of plenty, because there could come a famine time in your life. There could come a sickness. You could lose your job. You could fall upon hard times. The Bible tells us that we're to be diligent to know the state of our flocks and look well to thy herds. But in the very next verse, it tells us that money takes wings, and sometimes things will happen in our life that were unexpected. And so we need to be prepared for those things, and learning to save, living by a budget is so vital to that happening. So once you've started accumulating a cushion of cash or an emergency savings fund, it will not be necessary anymore to prepare Forms 3 and 4 each month. Because Forms 1 and 2 need to be updated only for any changes each month, it will be necessary then to prepare only Forms 5, 6, and 7 each month, as long as the appropriate balance in your savings account is being maintained. Tom Copland writes this as well. Note that this system could be used to project your new budget if you are considering a major purchase, such as a new house. The objective is to determine whether you can afford it before you buy. In conclusion, let me just say a few thoughts. The objective of this budgeting system is to provide a simple and organized approach to managing your monthly cash flow. If you feel overwhelmed, remember that God is all-powerful. God is present everywhere. God is omnipotent. He's omniscient. He's all-knowing. And God can guide you, and God can give you wisdom to help you to get your finances under control, to get your financial situation in order, and so that you can be free from financial anxiety and stress and so on. God wants you to be able to experience peace. And God can give you wisdom to help you in all of this if you'll just but ask Him. Again, James 1:5, if any of you lack wisdom, let him ask of God. If you have any questions about the Copland budgeting system, you can contact CoplandFinancialMinistries.org. You can reach out to them for help, and I'm sure they'd be willing to help you. Or you can contact myself, and I'd be glad to try to help you and try to answer your questions and try to help you work through things to get organized and to live by a budget and develop a plan for your life. What's the assignment for this week? What's the assignment? The first and most important assignment this week, and for you to be working diligently on this week and in the coming weeks, don't put it off, is for you to be preparing your budget. Preparing your budget. Be sure to include your spouse in the process if you're married. If you're not currently using a budgeting system, then give the Copland budgeting system a try. If you have not already downloaded it, again, you could get it from CoplandFinancialMinistries.org under the budgeting tab or heading at the top. Or you could send me an email. My email address is pastorjohnston@rogers.com, and I'd be glad to send you the files that explain it and the Excel file that has these 7 forms that you can use in developing your budget. Feel free to reach out. Again, if you have problems, reach out and ask for help. Seek the Lord, seek godly counsel, and reach out for help when it comes to developing and implementing a budget for your life. And you will be so glad that you did. God bless you. Thanks so much for watching this lesson today.